Hello, and welcome to our International Women's Day webinar on how technology and finance can empower women. My name is Dr. Renée Friedman. I'm editor-in-chief here at EXANTE. The purpose of today's webinar is really to explore how new technologies, new regulations, and the new finance tools that have been developed can help reduce the gender wealth gap and potentially help reduce the gender pay gap, as well as the management gap. To start off with, before I introduce our amazing panel of speakers, I just want to start with a few statistics just to get us all thinking a little bit today. And I see this every International Women's Day, and I get both a little happy and a little depressed. So I'm just going to run through some data. So according to OECD data, which is the most recent, recent stuff they have is 2020. They don't really have 2021, and yet all of this has been affected, obviously, by COVID. The gender pay gap in the EU stands at 14.1%. In the UK, it's a bit higher, actually, at over 16%. And the gender overall earnings gap, which measures the combined impact of the average hourly earnings, the monthly average of the number of hours paid before any adjustments for part-time work, and the employment rate, which stood at 36.7% in 2018, which is the most recent year the figure is available for. And according to the World Economic Forum Global Gender Gap Report 2021, women represented just 27% of all managerial positions. As I said, a little depressing. But one of the things that we're looking to discuss this year is understand why women are earning less and consequently investing less. And we have to think, is it due to education? And part of this is, I can tell you, in the UK, women make up approximately 32% of economics undergraduates. That is an increase since 1996, when it was only 27%. And now amongst MBA students globally, MBA programs are increasing percentage of women as well, approximately 39%, up from numbers a few years ago. However, when we look at senior roles, particularly in things like venture capital and private equity, Harvard Business School study found that in the US, women just held just 9% and 6% of those senior management positions in venture capital and private equity, respectively. So there's a lot to think about and discuss today. And as I said, I'd like to introduce an amazing panel of women whose experiences and skills have me absolutely awed. So I'm going to start off with introducing Gold Darr-Hood. Gold is a prodigy engineer, MBA and serial tech founder. Her experience spans dozens of industries and organizations, including BlackRock and Deloitte, and she's overseen the development of over 200 technologies as a university professor. She's blended her doctoral experience in AI decision support systems for disaster management and global resource allocation into systemic solutions in finance and the health of the planet. Her current work focuses on eliminating systemic barriers to women's participation in the economy to attain true gender parity. So she's got a lot on her plate. We also have Lena Collini. Lena is a consulting manager at Cognizant here in the UK. She is a trusted advisor for banks and financial institutions. And essentially, she helps them build out their digital ecosystems to leverage the latest technology enablers such as open APIs, cloud, and artificial intelligence. Basically, she's an expert in open banking and the open finance domain. She has delivered next generation products offerings in partnership with leading fintech firms and partner platforms and platform partners, And she is a passionate advocate of diversity and inclusion. And Lena leads the Women Empowerment Network at Cognizant, and she is recognized as a Women in FinTech Rising Star by Innovate Finance and a Tech Women 100 winner by We Are Tech Women Industry Network. And finally, we have the amazing Felicia Murray Singh. She was CEO and founder of Akoni, which was recently acquired. It's a cash marketplace and payments firm. She's worked extensively in the wealth sector and in financial inclusion with mobile savings, microinsurance products, and affinity reward products. She works on API-first solutions for the retail, high net worth, and SME markets. She also advises minority founders, fintechs. She co-founded Hive Founders, which is a community of 300 plus female entrepreneurs, and still finds time to be on the steering committee of Open 51, which is focused on sharing thought leadership of senior women in the open finance and open data space. Among her many awards, Fee has been recognized by Innovate Finance Powerless Senior Leaders, Innovator of the Year, Every Woman in Tech overall winner. So as I said, amazingly crazy, impressive panel. And thank you all so much for being here today. Again, we really appreciate your insights, your knowledge, and your experiences. So to start off with, let's start off with how technology, is technology helping women manage their money and plan for their future? Is it really true that this is happening? And the reason I ask this is that we've seen repeatedly that there's a growing number of educational and advisory websites that are targeting women in particular. Right? We've all seen these videos off of YouTube, or everything, particularly over the past 2 years, and everyone's been home, everything's been popping up on the web. And we know that it's not necessarily working, because only about half of the women in the UK and the US have ever invested. Although that number has been rising, particularly during the pandemic. We've seen the growth in day traders a bit. But the fact is that there are a smaller ratio of women investors. It's a global problem. It goes back to that global wealth gap. So this forces us to ask several questions. I'm going to throw this out there and let's get talking. Why is the advice or the guidance that's being given not hitting the target audience? What are the barriers that we're seeing? Why aren't financial advisors and other financial professionals getting it right? Why aren't they managing to target women successfully? Other sectors do, retail does, for example. And why are they failing essentially just to engage women? So throw that out there. Who'd like to start first? Hands?
I can go first.
Great.
Renée. And thank you so much for having me on this panel. Lovely to share this panel with some fantastic ladies out there. Like you said, yes, there is a surge in the female investors who are taking up now investing on these wealth tech platforms. We saw that mainly during the pandemic, but like you said, it's still not hitting the target audience. And I think one of the major barriers is there is no compelling proposition for women investors out there. A lot of times we see these advisory websites are focusing too much on the product's performance rather than focusing on the life goals that women are really interested in. I mean, as a woman, I would care about how do I build my first home? How do I start saving and investing for my first home? Other women out there might be already thinking about how they start investing for childcare. These are the life goals that these advisory websites need to focus on, which is kind of been missing from the financial services sector at this point. Also, I think you touched upon a beautiful point of retail sector nailing this target really well. I mean, one example that I can think of is Victoria's Secrets, right? A clothing line who has changed its brand positioning by introducing a range of line of clothing from plus wear to swimwear to maternity wear and so on. I think this level of personalization is still missing in our sector, in the financial services industry. I think this is where we need to kind of hit and target the space by building more compelling propositions to invite female investors on board. Love to hear other panelists' thoughts as well.
Yeah. Go ahead.
Okay, go.
I definitely agree with Lena that there is a big issue about not tailoring towards life events. And also building on that, there is a big question around what are the overall communal goals that you want to build towards as well. And really it's ironic because it's not a modern idea. It's actually the classic utilization of finance. You go back 200 years and all finance was about what do we literally want to build in our communities as communal assets, as communal companies. And women still have that philosophy because just as Lena pointed out, it's the first house, but it's also the kids. And maybe that's daycare, but maybe that's also what will my children be able to do for work? What do we do as a community? And so I have seen a few companies, I will say, successfully start to pick up traction with female investors by tailoring a little bit from those lenses. but there are still also some data gaps, because I worked with the Sustainable Financial Regulation Disclosure in Europe. That's getting a little bit more towards, some very low level ideas like carbon footprint, but it's not getting to more sophisticated ideas that women do care about, like structural support for how do we make sure investment is in place so that we can do childcare management, and so that we can do, programmatic education over spans of years. And that's a data infrastructure problem that, once it's paired with the investment tools that have been built in the last few years, could be very successful.
Okay. And Fee, you wanted to comment?
Yeah. So I think, obviously, thanks for having me on the panel, and I agree with what everyone has said so far. I think on top of that, really, women tend to be an afterthought in financial services. So even though you are seeing all of these small initiatives, and I say, even though some of them might have gained significant traction, they are actually tiny compared to the overall wealth sector. It's nothing compared to what, is really out there. And I think women invest and make decisions in completely different ways to the way the wealth sector has conventionally operated, and there has not been enough of a shift. So like, as an example, this whole concept for women, that wealth and investment are really about a means to an end, not an end. Whereas men, they really see through the lens of, well, how is my investment portfolio performing? It's a completely different concept. And that means, I think, much more risk and protection considerations have to be built into the product and the proposition design. And then there's lots of other things that, which are quite, well researched about women and a different attitude towards risk, and how looking more at facts than intuition in decision making is quite important in the wealth space. And then I think we're seeing this big, generational difference. So the millennial, the younger generation are a little bit more confident, because it all comes back to that confidence in taking risk, which is what investment is perceived as. Whereas actually the older generation, where most of the wealth is sitting right now, are, I feel, totally neglected. And what's quite interesting to me, because I work with a number of players in the wealth sector, is that we see a lot of talk about intergenerational wealth shift, which is, the theory that, the older generation is going to be handing over their wealth to the younger generation. But in fact, 70% of those first go to women before going to the younger generation. And that's on average around 10 years. So if a financial advisor or a platform has not engaged women sufficiently and they feel left out, they will move their advice or their service somewhere else, where they are getting that service for that period of 5-10 years before they then hand it over on a fully intergenerational wealth basis. So I think that the entire market needs a rethink in the way it constructs, targeting and working with women.
Excellent point. Excellent point. So that actually brings me to the next question. That really means that in terms of the platforms that are being created or the services offered, it has a lot to do with how the user journey itself is being defined. So I want to go into that a little bit. We've had this thing of open APIs, open banking, open data. Let's get an understanding of what that all means. And how does that actually, does that actually help women in terms of, or potentially help women in how they can manage their funds, how they can learn to invest, how they can better be able to access credit to become entrepreneurs themselves and develop their own wealth journey that way? And also, you mentioned, I'll go into that, and I'm going to get into the generational thing. So I'm going to throw that one out there in terms of the whole open APIs, open banking, and the impact that is having or should be having, and where there needs to be some change there. So who'd ever like to respond to that one first?
Is the question more focused on the open data, open finance, or the general UX and CX side of things?
Well, that's I kind of want to hit both. I think one is, what is the first bit and how does it relate to the second bit?
Okay. So I'll just give my view, having worked on a number of open banking initiatives and now expanding that to open finance, using things that are coming via like pensions dashboard and other APIs in the wealth sector, is before we even talk about experience, trust and security for me are number one. And I think that women, and I have seen some research, view this in a different way, in a more stringent way than men in terms of sharing their data. Mm-hmm. So that whole relationship has to be built up, whether it's digitally or otherwise, to overcome that, the concerns about sharing data, and, concerns around the security of data and access, how to access it and so on. So that's the first thing. And that has to be hard baked into the whole user experience. And in particular, because we are now, entering the next 5-10 years where we'll see convergence. So I think whether it's a super app offering like mass market solutions to investment, or right at the top end where you kind of see all of your assets in one place, your property values, all of that kind of thing. Actually, you're having a single point of data consent. And that has to have been overcome before you can actually say, well, I want to transact on these particular products or investments or assets or whatever the case may be. So first thing. And I think the whole concept of understanding, well, what are the objectives of a woman investing? Different cultural divides is really important. Mm-hmm. And the amount of information that has to be really consumed has to be done in a very different way to how it's been done historically, with financial coaching. Like I read this one article, I think it was last week, where it said that there's going to be no distinction between financial management and personal finance and wealth and investments over the next few years. So all of that is going to have blended into one. And that means that women need a much broader view of, the financial coach or personal financial management, because it has to be inclusive of families, or, when I say that, kids or whoever they caretake with. And then you can start moving into user experience and customer experience.
Anybody else have some thoughts on that? Lena or Gold?
Yeah, I completely agree with what Fee just said. And just to also, for the attendees, to make clear what open banking, or the power of open banking that it brings to the table, right? So open banking, open APIs is one of the latest technologies which will help you to consolidate all your financial information across your current accounts, saving accounts, other pension products. So basically, it will bring your finances in a consolidated view in one place. And this view is what you can share with your wealth advisors, who can then look at your incomes, your spending patterns, and get detailed insights into telling you which product suits you the best. I see a lot of platforms are doing that now. Personally, I am using some of them like Plum, Nutmegs, who use open banking to tell you what suits you the best from an investment perspective. Also, I think one of the major points that I want to highlight here is the restrictions that it removes, right? Normally, the perception for everybody out there is investment is only for high net worth individuals. With open banking, with these wealth tech platforms, this perception is being broken, and you can invest or start investing with as low as £1 now. So I think this is the beauty of technology, the wealth tech platforms that are into play, that are trying to remove these barriers to entry, and males, females who are new to investing can now try to start investing through these platforms.
Yeah. So, sorry.
Oh, yeah, no, I absolutely agree with Lena and Felicia here in terms of there being consumer appetite in order to get this information consolidated. I don't know that I'm terribly optimistic that there is regulatory framework in place to make a lot of this information very useful to individuals, particularly because of the issue that I was referencing, where the type of data that's recorded is just not very relevant to the decision-making process. And part of that is the intergenerational ones that kind of open that can of worms a bit. Yeah. Felicia's point is incredibly interesting and on point, that we're about to have women outnumber men as the older male generation.
I think we've
dying off, particularly in some kind of decision makers. Can you hear me okay?
I think we're having a little bit of technical difficulty. Let's keep talking, and if you could just repeat what you just said, that would be great. I think we lost that.
That Felicia's point was well taken. We will have, a generation basically where we outnumber men by quite a bit. But the data that's in place here, I think the younger generation of women is going to want to see from the security perspective Felicia was talking about, a move over to blockchain and incorporation of a lot of different types of data, very much including things like geospatial data, because I think it's really going to matter to women where their money is going. Is it local? Is it a place that they care about? And right now, that just isn't even a part of the data reporting framework for the financial institutions that men have set in place. And that is something that we can change. But currently, open banking doesn't give you enough information to really make that engagement worthy for women. And I think that's the shift that we'll need to see. Once the information is available, then the push to get relevant information and architecture in place to make it interesting.
Okay, those are very good points. I want to go back to this intergenerational thing as well as, a lot of this, we're talking about the use of blockchain, we're talking about the use of platforms. And Fee, you've made that very good point that it's the older women within this who aren't digital natives. And this goes back to that point of engagement, that the user experience is friendly enough to make women feel confident enough and trust and use them. How are they actually reaching out, or what needs to be done to get these non-digital natives who don't fully understand this point of blockchain, who don't, okay, we all use the internet, we're all used to it now, but it's just, do I trust it? I don't know enough about it. Never mind that they don't have the confidence potentially, because most women, let's face it, they aren't going to look at something. Women tend to be, as you said, the risk profiles, we all know this, for women tend to be very different than they are for men. Women want to be more sure before they invest, but when they are sure, they really invest. They move faster than men. But what needs to be done? What do we need done so that they feel better and able to access the investment tools that are out there? Or, how do we get all of the financial companies, whether they are advisors or trading platforms or anything else, to actually pay attention to this? Because I can tell you, I come from a generation that are not digital natives per se. I had to learn along the way, and I know a lot of my contemporaries are still feeling a bit left behind. And we are the ones at this stage with the money. So how do they access?
So, and can I just say, Renee, it's quite interesting for me. We've spoken a lot about the intergenerational wealth shift, but actually there are very few good tools in decumulation and drawdown. So it's not unique to women. It's actually that most of, like the robos and all that, they sort of young, typically, young men who've come up with this robo prop, and they don't think about that stage when actually there will be a transition, whether it's to a decumulation phase or whatever the case may be. So it's not unique to women. It's just more reinforced like with women. So I think that if we take a product approach, like the whole concept of product management and so on, it becomes more complex because it's, for me, more than product. There's a proposition and so on. And then looking around like how to better serve that market. The whole go-to-market, I think women are more like hyper-personalized, more outcomes-based than men on the whole. So that has to be incorporated into like quite a strong and tight value proposition. And I think there needs to be more segmentation with women. And just echoing what everyone has on the panel said, we can use all the data that's out there, for that segmentation. And what I'm seeing in the wealth sector now is one of the things, and this all comes from the complexity of converging multiple data sources, is working on how you can overcome conduct risk. Because, if I take your data, Renee, from your banking account, and then I offer you a wealth product, the regulator doesn't like that, because they're like, well, how broad did you get to know Renee? How broad a data set did you look at? Did you curate and limit the solutions? Did you look across the market? So, and so a lot of players and providers who I deal with they're very nervous about doing that. There's tools around, but they're concerned. So now we're starting to see more tools at the front end where you do a lot of tagging in respect of the marketing side and so on. So if I've got a client base of 1 million or 5 million clients, I can tag where I see them. And even more amazing, I don't know whether anyone has seen this, but essentially it's going to sound crazy. What's the right word? Fabricated data. So when you're testing your tools, you need to test AI and machine learning tools on huge sets of data, but a bank or a wealth platform cannot use their own clients' data.
Yeah.
So there are now fintechs who create the fabricated data using the real data. And even if you don't have, let's say, the millennial age group who, want to do $1 a month or something, they can fabricate that as well for you to then test your tools. So for me, being able to then tag the marketing personas and deliver product, that then shows that you are personalizing products and have considered all the data that's available before aligning clients to products. So there has to be a very different kind of go-to-market strategy and value prop.
Going on to that AI point, and Gold, I'd like to bring you in on this as well, the bias. We know that there's bias in the data. How do we get around it? In terms of the algorithms that are created, we look at that in terms of their, what's advised in terms of the planning. We see the bias in terms of the credit, et cetera. How do we get around that? What impact does that have on women? And how is the market overall responding to this? How are regulators responding to this? Are they actually looking to mitigate these biases that you are in fact talking about that exist?
That is something that is very much underway. I think as far as we've gotten in debiasing these is basically a tacit acknowledgement that bias exists. But the only way to debias these kinds of algorithms, the way that bias gets introduced is from the humans that originally ask the questions and then code them into the systems, right? So it really requires us to go back and say, are we asking the right questions? And are we getting a different outcome than we thought we would have? I think there's a heavy parallel in between what's happening in finance and what we looked at in higher education for STEM, for science, technical mathematic areas with women, where we said we really want more women pursuing these fields. We want more women PhDs. And the answer to that problem was not an issue where the bias said, well, more women should just choose to study mathematics and science. And that really didn't work. We really needed to not look for them as freshmen in college or even seniors in high school. We needed to go all the way back to when they were in middle school in order to make that gap shift. So right now, if we want to really debias these algorithms, what we need to do is look earlier stage when women are dropping out in the pipeline and where we don't gather much data right now, because that's not where our financial systems are concentrated. And we need to produce a lot of data in those areas. And that's where some of my focus is right now, is in solving those data gaps by creating programs with public-private partnerships where the governments there have really the incentive that drives the force around this data collection, because it comes down to more basic questions than profitability, like workforce participation and like GDP increase. So I think those are very critical. And similarly, I think Felicia did an amazing job of answering the specifics on how we can make something security-based for these women. But on an emotional level, to counteract the data validity that we have to add, I think something that addresses two of these potential problems simultaneously is to really make sure we in the finance sector push the security tools that we're interested in, like blockchain, in healthcare. Because all these older women that are phasing in, what they're going to be interacting with on a weekly basis are doctors and our healthcare institutions. And that is a great place to socialize them to new technologies with other professionals that they interact with that they trust. And if they can feel confident in how healthcare data is being handled and pulling bias out of healthcare because of these big available data sets, then those tools being translated into finance, I think, is the winning strategy.
Wow, that's an interesting point. Anybody else have any comment on that?
Yeah, Renée, just to add to what Gold just mentioned, I think these models need to be really tested rigorously against these biases and discriminations. So we need to see that level of testing on these models. And I also briefly want to touch upon the gender representation, right? So we need more female data scientists creating these data models so that you bring that gender lens into perspective and in a way eliminate these biases or unconscious bias that goes behind these models. So I think these are the two aspects that I would want to see more focus on, having more women in STEM. And I think that was also what Gold was pointing out. Having more data scientists, having more people, women representation in STEM will kind of help in eliminating these biases in data.
And just echoing what Lena's saying, is also more women in the wealth side. more women representing wealth firms, more women representing wealth tech firms, and there are more women role models. I am like almost a persona. I am a single mother. I invested like this. That's my use case. And the more that women see this, and for me, from a younger age, the better it is, because the whole concept of like compounded interest is totally missed if women pick it up when they're 50 type thing. Yeah.
And actually, onto that point about women at more senior levels and being, in many ways, role models for younger women, that's actually one of the downsides we've seen during COVID, is that women are not progressing between that middle management rank, and hence we're not going to see it at the higher levels as well. That's why so that number, which may have been increased over the past few years at the very beginning that I gave, which I think was senior level positions, 27% of senior level positions, it's going to be even less now, potentially because of COVID, unless companies take action on this. So these are all absolutely spot on points, I think. But I think one of the things we also have to look at when we're looking at these different platforms, and we're saying, okay, that are being put together, that they're not being representative for the different age groups, and there's not a differentiation between that. We have the bias problem on this. There is also the question of whether or not they're just, we've made it clear that they may not be convenient enough. We haven't actually fully discussed that, or that they may not recognize, because of this particular bias, they don't recognize and accommodate a woman's changing investment needs over time, in matching in terms of product offerings and services. But are there other things that might hold back? Is it fee structures or certain restrictions that do not allow women to fully utilize what is currently out there as well? Is that a big issue as well, do you think, holding back women from looking to invest for themselves at whatever level or whatever life stage that they might be at? Anyone have any views on that?
Yeah, I think you're right, Renée. I mean, I haven't thought about it like as in, because we've discussed so many points and so many issues, like the algorithms, the data science, the role modeling, the legislation. I think that there are other parts to the proposition in terms of that, how to do it. And I'm just trying to think what they are. Because we bringing it to where women are, and this is a trend anyway in banking, is, bringing your financial services to where you are as a customer, as opposed to expecting you to come to me, the financial provider. That is for sure something that will change, which maybe goes to what you're saying. Because we've kind of covered off like the proposition, the user experience, the data, the hyper-personalization. I think more clearer outcomes based, based on life stages. Have we covered that, do you think?
I think we can always talk more about that. There's a lot in terms of...
That's definitely a barrier for sure, in terms of your question about the additional part. Sorry, and let me leave it to the other panelists to add there. But
Lena,
yeah, I think we did speak.
Yeah, I think, go ahead, Lena.
Yeah, no, I was just agreeing to what Fee said. We spoke about outcome-based propositions that need to be in place. Also, one other thing is that we really need to cut down on the jargons or the pink themes and the marketing imagery that are usually focused towards men. We don't really need that. We need compelling propositions so that we can come forward and look at the value add from these platforms. So I think, that's another point in order to offer or attract or hit this target audience. We need to really cut down on the jargons, make it plain English, explain the value proposition out to your audience, and I think that should do the job. Which I believe a lot of fintechs are trying to do. I mean, we do see a lot of wealth tech platforms are trying to do that, but I think there's a huge potential and a long way to go.
I just want to address, Rena, what you mentioned. Sorry, Renée, can you hear me?
Yes.
I just wanted to kind of cover this question that you had around women dropping out of the pipeline during COVID. And that's really true, but it is also part of a larger trend that I think is worth acknowledging in this context, where employers are not accommodating workforce requests, and it's going to lead to their collapse. If they do not figure out a way to work with women's expectations and the shifting expectations of the labor force, they're not going to fare very well over the next couple of years. And we do have some radically changing expectations of what we want of corporations. And because of both of those things, we've seen a huge influx of women into the entrepreneurial sector, many of them quite serious-minded. And so there's two generations then of investors that are, potentially born as a result of that. One is hopefully we'll see a lot more, and I expect female unicorns. And I do personally tend to make sure that we're nurturing those to be successful. And those will have then a big influence over what kind of larger scale investment products are created, because they'll be LPs and check writers. But there's also this question of, I think we're fundamentally over restricting the portfolio options for women as well. Women want to invest in other women, and they're far more likely to, and that includes small scale operations. And the data that we've gotten out of things that are, considered trivial science experiments to other people in the finance sector, like EVA, that are doing microlending to other women, show absolutely phenomenal repayment rates for those geographies and for those working conditions. And realistically, we should be incorporating a broader selection of early stage investment opportunities to women for them to be able to support other female entrepreneurs away from just corporate positions that are not supporting women on the career pipeline, and towards young, aggressive companies that are going to be the unicorns of tomorrow, that show larger corporations how you must work with the new expectations of the labor force. And that is an investment opportunity where a huge amount of wealth will be generated, and where there's a massive opportunity to create wealth transfer to women. And we need to make sure that retail level investors have as much access to that as possible.
Okay, we just missed the last part of that, Gold. Unfortunately, you broke up a little bit there. I think we're having some bandwidth problems.
Sorry, I was saying that that's a massive opportunity for wealth transfer. It is where a lot of wealth will be generated over the next decade, and that's something we need to make sure retail investors have as much access to as possible.
Absolutely, it's an interesting point on that in terms of restricting portfolio options, and also that point of marketing, that pink marketing. It kind of goes to this point, and that's why I asked the question about the fee structure. Can we think about things that are marketed to women with a nice little pink color on it going through, or whatever it might be? It actually is much more expensive for women. They actually raise the price because now it's a women's product. Do we see that happening, or is there a possibility, and how do we prevent that happening in the finance space? It's really, and particularly, why should women be paying more? One, are they paying more? Two, are they getting the services that they're paying for, and fully understanding what they're getting? And it seems at this point, as we said, they're not hitting their markets. We're not seeing, yes, we've seen a jump up in women investors in terms of day traders, which has been fantastic to see. And I hope more women get involved within this and start taking a bit more control and have of their own financial futures. But what else, in terms of what do we see happening is there anything happening on the regulatory front to ensure this fairness in fee structure, or are we just going to be subject to this pink marketing theme that will raise prices for women but still restrict their portfolio options?
I think there's a lot happening on fairness in the legislation, like in the EU, which is really against the bias within algorithms. I mean, it's more broad, the legislation, than that. But it's around algorithmic decision making, which could be in recruitment, which could be in financial services, especially credit-based products. So I think we are seeing some sort of trend on that side. In respect of fees, I personally do believe that women do pay more, partly because portfolio sizes on average are smaller. So naturally, because of the typical tiered fee structure, that women then suffer on that basis, and partly because of what we've discussed before, the lack of knowledge, the lack of confidence in terms of being able to understand how does the market price properly and so on, and what you could do and look at as alternatives. So I think that we've got all of that to consider. And one of the things that Gold was saying on the portfolio structure, I think is quite important. And having that whole, like, yes, same, it's just another, metric within ESG, but which probably hasn't had enough attention because we've been focused very much on the environmental side. Mm-hmm. And, using gender diversity as one of the filters, I think is quite important, so that you can, make, part of your portfolio through that that lens of your portfolio decisions, or you can let your advisor know and so on that. And there's so many stats around that, women on boards, policies. Like there's a brilliant, I don't know if anyone's seen a brilliant Twitter bot, which is going today. Every company that tweets about IWD, the bot tweets what the gender pay gap is at that company.
Wow. Okay.
Yeah, it is hilarious when you read it. Like actually, the London Fire Brigade, women get paid 2% more than men on that, you know. So it's quite interesting, you know. I'm scrolling through seeing where's it more or less equal, and where are women get paying more? Hardly any of those. But so I'm just saying generally there's a lot of data which could be used in that portfolio construction that Gold mentioned.
And that's particularly, it's a very good point, but that's also particularly interesting with the gender pay gap information, because that is obviously something that's required in the UK of companies that employ more than 250 people. It is now becoming EU legislation as well, but we don't know what the situation is globally. And I don't know how quickly, I know Gold, you're based in the US. I don't know how quickly the US or other countries, particularly as an example in Asia, would be willing to actually reveal that information. Although I'm sure all of us will be on Twitter right after this call to find out.
Yeah, no, I mean, it's a closely guarded secret across the board for them to try and make sure that pay is restricted access. But I completely agree with Felicia on this point, and I do expect this to be a self-solving problem. You know, women are excellent purchasers. We make 75% of household decision-making, purchase options here. So as soon as we see more women in finance, we're going to see the pink tax eliminated. They're getting it in on us while they can, basically. But like as soon as we really have a sufficient array of options for women to choose from, the publicly available information on what fee structures really buy you, and the consumer pressure on what's expected of financial managers is bound to rise, and is probably part of the reason that we're getting pushback, because that sort of competition is not necessarily overly welcome. But it's really going to be a good thing for the marketplace. We've already seen, even with just a small uptick in this kind of participation, tremendous strides in terms of shareholder resolutions and investor stewardship. And that is also going to go up rather dramatically and kind of help police this and some barriers outside of finance as well. So the clock is ticking on this.
Lena, you wanted to say something?
Yeah, just on the gender pay gap point, right? That is one thing that really annoys me. I mean, we have had this Equality Act since 2010, and still date, we are reporting the gender pay gap numbers to be 16% in the UK, despite having this legislation in place, Renée, that you mentioned. So there's clearly a lot that the regulators need to do in this space, because gender pay gap is eventually leading into the investment gap, right? The gender investment gap that we are talking about. So I think there needs to be a huge regulatory intervention in this gender pay gap space, because 16% even after the Equality Act since 2010 doesn't make sense in 2022, right? And the numbers have even gotten worse, Renée, after the COVID, after the pandemic. We were tracking downward trend before the pandemic, but since the pandemic, again, the gap has widened. So yeah, we need regulatory intervention, not just globally, I think to start with even locally in the UK, to see the difference in the numbers.
Yeah, I agree. One of the things that's extremely concerning is, I call it the gender agenda has totally stalled. That we have not seen any progress that is meaningful in years. And I don't think that, based on what we are doing now, everything that's been done, like even something like the Rose Review and the government's review, which was part of with the Rose Review, nothing has made a difference as far as I'm concerned. So there has to be a holistic and, I think, interventionist approach to providing a solution, where looking at the data points across, the typical female's life from when they're very young in terms of the risk taking, all the way to college, then your first job, whether you go on to be an entrepreneur and so on. I used to think it was all very, meritocracy based. And having seen the fact that nothing has changed makes me think there has to be some sort of intervention. And this goes all the way up to funding for women-owned businesses. Like for me, it's extremely concerning, the lack of investment in female-founded and female-driven businesses. And there has to be a more radical shift that takes place in that respect.
In terms of... No, go ahead, Cole, please.
I couldn't agree more on that statement. I mean, and this is the point I was alluding to earlier with, we really did do that analysis in academia about what was keeping women out of the pipeline. And we literally found, to fix this problem, you had to go back to middle school. And that exact same gap exists here with women-run businesses, because what's happening is, now that we finally got an acknowledgement, essentially in the last 2 years at the most, that there is this gap, people started pouring in money, but where do they want to put it? They want to put it $100 million at a time into a women-run business. And that's not where we are in the pipeline. You just can't put that amount into a vehicle that late stage for single individual companies, nor should you. If we really want to solve this problem at scale, what we need is to not say we want a 20% improvement. We're never going to hit 2030 goals at a 20% improvement. We need to say we want to fund a huge selection of entrepreneurs simultaneously at a very early stage and intentionally pipeline them to where they could then have these larger scale investments, which is why I'm working on a project to fund 1 million founders, quite literally, by 2030 with this public-private partnership, because I really think that is the only way we're going to see that paradigm shift, is to get a very large number of female entrepreneurs into that pipeline and give them a real pathway to get to the place that the financial market seems to think that they should be in yesterday.
It's a very interesting point. Just thinking about this, not just in terms of how that they're getting the level of investment. Now, part of this, obviously, we know, how do companies get money? They get money through people buying their stocks, et cetera. It's part of the overall investment point of that. In terms of other, the products that are being put out on platforms, if we want to get more women investing in women, how do we get that onto product platforms?
So
how does that happen potentially?
So I think we have to look at all the different stages, from very early stage, which is typical, angel funded, all the way across to, like £100 million revenue companies and so on. And if you start right at the beginning, the issue is we come back to women and their attitude to risk. So, for instance, my company was funded by a network here called Angel Academy, which is primarily women investing in female-founded businesses. They're also men and investing in female-founded businesses, and they are very focused on changing that narrative. And a lot of what they do is around education of investors. So, for instance, in the UK, we have this tax regime where you can get significant deductions investing in early stage SEIs and EIS. And a lot of women are not aware of that. So it's a significant reduction in your risk at the investment on that side. And then I think when we start moving to later stage companies, of which there's a lot of consultation here about changing the rules, where insurance companies can invest, then I think it's much more around outcomes and personalization and so on.
It's very interesting points in terms of going back to that group investing, because you actually went, as you said, through basically a form of group investing in terms of the angel investors network on that. So when you think about the point of group investing, people learning from other people's experiences as well within that group, or looking to invest as a block in a group, again, are women more successful in this? Are they being held back? Are they being intimidated? What is your experience or feeling on this?
You go ahead, Gold.
Well, there are some dynamics that are non-obvious from the consumer purchasing angle, because even though women do make those majority of household purchasing decisions, the assumptions in many areas that this either has to be a joint decision or it's not their decision to make can complicate matters at later demographic stages. And that's something that we haven't really studied well from a product development standpoint, from a communication standpoint, and I think we should, so that we have more clarity on that question. But from what, opportunities and networks do exist, I agree there are some fantastic women's angel networks. There's also groups like SheEO, which are wonderful for this sort of thing, investor education, and can kind of teach people to walk through the venture process. I think those are incredibly important in the ecosystem, but I do also think that there is a product block that is missing that really does allow access into some of these earlier stage opportunities, more personalized opportunities, because there's not a good way right now of getting large block financing into some of the areas that people do care about the most. And quite frankly, where there are some of them that I can't go onto most investment platforms and say, I only want to invest in women and just have that as a filtration option, is a mistake.
That's an interesting point. I mean, do we get accused of being biased against men if we do that?
It depends on your jurisdiction.
That is true. Okay, I'm going to shift on to another couple of questions. Just
Renée, can I just say one more thing on your point, because I think it's is that there are two different studies which have shown that where women are in an asset management or hedge fund team, that they outperform men-only teams, and the percentage, same thing with female-founded businesses or diverse founding teams. There's like something like 37% greater chance of outperforming just a male-only team. So it's very obvious to me that there should be something done. So I just wanted to add that.
No, those are very important points and very important statistics. And we also know that, women investors in general, and there have been various studies that have shown this, women's returns over a course of 10 years, where I think it was JP Morgan study, maybe, it was them, it was 0.4% on average, which means that, it's not the same as median, it could be a lot higher with some women, and in shorter studies showing even higher percentage. So women, as I said, you shouldn't be afraid. They are good and they need to trust themselves. But this goes back to, I just want to kind of put it into this point of how women think about or learn to think about investing. And there's this point of a gamified approach to investing, which tends to be very much a male point of view. How does that affect women in terms of their ability to invest, their confidence in investing? Or is this something that is no longer an issue?
I think, Renée, this is where we need to start really at a very young age. I think a lot of platforms are focusing on financial education programs by offering youth or child accounts where young girls and boys can start really early to understand how to manage finances or even understand the concept of savings and investments. So I think this is a very big step in making our girls understand that how they have to eventually control finances going forward and the concept of investments and savings. So there is a huge potential in there by offering these youth accounts or child accounts. And also going back to your gamified point, right? I am personally very attracted towards propositions which offer gamified investments options. I am currently doing with the likes of other wealth tech platforms in the market. So these are some fun ways of really getting attracted towards investments. And I find them really attractive. And I think Gen Z women can definitely get attracted towards these propositions. And there is a huge potential is what I see.
Okay, so people
I see a lot of wisdom in the way that Lena phrased that with talking about young stage, education and then gamification. Completely agree. There's a wonderful woman who has worked at the major international banks and is doing now financial literacy for children and is a children's author to specifically bridge that gap because she determined that, where that pay gap split can actually be traced to is about 5 to 8 years old. And I am inclined to agree that one of the best uses of gamification is actually in education. And I have worked with a couple of financial institutions recently to look at using a combination of interactive advertising, which works with one of the previous things that I've been working on, along with education in financial literacy, to make sure that instead of push advertising to say, we want you to just buy this, to actually make that part of your value proposition, especially to women and to younger people, to get them to engage with your products and to get them to ask questions and learn things about investment and their portfolio in the process. I think that's very healthy and a good direction to take. You just have to hire the right people. We don't have a lot of those yet, so it may be that we need to pipeline professionals in this space.
Yeah, and just echoing all of that, it's also about risk, because sometimes all those risk questionnaires can be quite flawed, but using gamification then can provide a better solution. And also, I think, Gold, like, as your circumstances change, you're playing the game again, and then there's a rebalancing of the portfolio based on what. So I feel that there is a huge use case for gamification in the sector.
Fantastic. That's good to know, because I don't know much about gamification myself before this. So I think the interesting point on this, you've talked, and this kind of brings us almost back full circle to the point of education and financial literacy. Now, women are great savers. Okay, we're taught at a very young age, you need to save, you need to save, you need to save for your future. We're not taught you need to invest. And that, to me, has been, at least in my generation, of where financial literacy fails. So is it through this gamification that it's inclusive of beyond just this is what you need to say, this is beyond just what you need to do to manage a budget or what you need to plan for life stages, but actual investment within that and adjustments of investment tools. So it's kind of a very Bayesian approach, I suppose, to this, and that you're learning from the probabilities and how they change each time. Is that what you mean?
I think the question of Bayesian is definitely fair. And I think, one of the tangentials of Felicia's point that is really important for us to consider when we talk about this is that younger people today have very differentiated goals. It is difficult enough for them to take an assessment in high school about what they want to be later in life, much less what their life goals might even look like. The concept of whether they even have independent home ownership, whether they get married, whether they have kids at all, is now up in the air in a way that it really wasn't before. So I do think that there will be a necessary utilization of some of these probabilistic differentiations and groupings, because we're not going to have anywhere near a binary sort of system about what buckets we're trying to dump people in, whether it's gamification or general education, or just how we're building financial tools to help them handle goals. And that's before we get into even the cultural distinctions or where people are in their life cycle. So there are a lot more goals. And really, that's good news for us in the financial profession space, right? Because that means that there's endless tailoring for us to do. There's an endless amount of knowledge work that needs to be done to identify those groups and to help make sure that they're going to be able to find the right solutions. So I don't think we should be intimidated by that, but I do think that that's going to require a lot more both statistical analysis and sociocultural analysis than has been done previously in this sector. And that is a really good space for us to be working in. But it's certainly a new one.
Yeah, I agree. I think we need to have, which is why I think there has to be intervention. We need a clear understanding. Is this whole wealth gender gap simply due to women earning less, being more part-time than men? Now we can see suffering from the fallout from COVID and so on. And of course, taking on primary caretaker responsibilities. So if you just take those three, then no attitude to risk and all of these other things will change it unless there is some intervention. So we need to see, I feel, completely different products structured that fit that whole lifestyle, and even the concept of women working, gig economy style. I'm working a bit, I'm taking a break, then I'm doing this. And you need products that follow that life cycle. I mean, as an example, many women don't know they can just carry on contributing to a pension fund if they're taking a break. So they just stop because their work stops. I mean, I'm just giving some small examples where, what is happening and a significant change that needs to happen.
Absolutely. And that not basically what it comes down to is knowledge is power. We want women to have more power when it comes down to it. And that, so one last thing I just want to get into before we end this, and I'm going to think, before we end this, one of the big things, is that we've seen this massive change in technology itself. That was the whole point of today's conversation, and how it's affecting women in terms in the workplace, in terms of, and their finances. Is it really impacting women's representation at, we've mentioned the point of senior levels, across all investment sectors? Are we only seeing this in small sectors? Are we seeing more women VCs, more women involved in PE, in fund management, hedge funds, and other asset management houses? Is technology, are the advances that we're seeing in technology and the changes in regulation that we're seeing allowing or attracting more women to work in finance itself and in retaining women, most importantly, because we know a lot of women leave the workforce over a period of time?
Yeah, I think we are talking a lot in this space, Renée. We have a lot of discussions, a lot of literature out there talking about the same points, that we need women representation, but we don't see the difference in the numbers really. Eventually, we are not seeing that output. We still have 15-20% of the female advisory population of the total advisors out there in the market. So we still are not seeing that equilibrium being met, right? Despite having a lot of talks. However, I'm still very positive. I know even after such discussions, there is a long way to go, but I'm still very positive to see that positive change somewhere down the tunnel.
Yeah, we're seeing an unprecedented number of women apply to these positions and kind of file to do VC funds, to do some of these different things. What we need to see a lot more of are LPs actually writing checks to them. And the biggest gap there right now is that we have a pretty clear story from the data that track record in investment is not a very good predictor of future success for a variety of reasons. Harvard Business would love to give you some reviews on this, but that what we are seeing is there's still a perception that that's somehow absolutely necessary, particularly when it comes to values that are being managed. And so what LPs are saying is, well, we want you to have already managed $25 million for us to give you $25 million. And we can say, take a look at the global population and you will not find a sufficient number of people to do this. And if that were a predictor of success, I would be all for it. We would be talking about a different solution path, but it's not. And so clearly we still need to have another conversation about educating LPs about what is useful in their financial managers to make sure that they actually start diversifying their checks to people who can make them more money.
And also on the LP point, even why aren't we going one step above that to the pension funds, the sovereign wealth funds who put the money into the VCs? So is that, and that comes back to intervention, because none of those institutions will do anything without there being some policy intervention. And then that then gets pushed down. Well, the LPs, what are you doing? Show me evidence of that financial education, of broader woman participation in, you know, your workforce, of your gender pay gap, and so on. So I think it's quite interesting that women, we haven't ever leveraged the value of us as a group. And I'll just give you an example. A friend of mine works in ethical trading, and the company that she works for, a global company, they invest significantly in social impact, environmental impact. So I said, you know, the company's got more than 100,000 people in its workforce, probably around about 50% women. I said, well, has the company provided a tool for that 50% of those 100,000 women to make a decision on their own pension, to make a gender lens decision? And they haven't provided that. And no company thinks of ESG through that lens at the moment at all. So for me, there has to be much more like using the power of a group in terms of making the change. There has to be a different approach to what we've done up till now.
Absolutely. Well, I'm going to end it on that. It's been an amazing conversation, incredibly interesting. The fact that we've realized that there are data gaps, there's problems with the data infrastructure, that there are issues around risk and protection that need to be addressed to get women to invest. Like, you know, if companies we have to take into account the generational differences that exist. Otherwise, all of this in terms of the user experience that companies are trying to put out there, and pink marketing is not going to work. All of these need to be addressed. Otherwise, we're not going to get anywhere. But hopefully, in a year from now, hopefully we'll have some better stats to report upon. And with that, I'd like to thank you all very, very much for your time. It's been an amazing conversation. I've learned so much from all of you. I'd like to thank Lena Collini, Felicia Murray, Singh, and Darr-Hood. Thank you all so much, and have a very good rest of the day, and a happy International Women's Day to everyone.
Thank you, Renée,
Thank you so much,
and Lena.
Lovely talking to you all. Bye-bye.